Alright, we're going to go ahead and get started. So, per usual, with the S&P on the left, NASDAQ in the middle, and the Dow on the right. So, as we were expecting this week to be, this week is low probability and quote unquote doesn't make much sense. So, if we look at the high end of the range for the S&P, specifically the high of Tuesday, being the previous weekly cycle quarter's high, we can see that the S&P has ran above there, while the NASDAQ has created a failure swing, creating a sequential SMT. But if we look closer once again, we have the NASDAQ taking out the low of the previous day, being the previous quarter. So you can see right here on the weekly cycle, creating another sequential SMT. And then we have the Dow, completely out of sync, still took out Tuesday's high, creating a failure swing on Tuesday's low. So this is a low probability market, and this is the sort of price action that breeds a consolidation. So coming into today, the whole purpose of even tape reading today is to view price without a bias. Coming into the day without a very clear draw on liquidity or very clear bias, because that is the number one thing that I talk about, is you always want to come into the day with everything predetermined of, I want to see price draw here on the higher time frame, I want to see price do this, and then this, that, and the third. But coming into today, we don't have that. So we're going to see how that influences how we view the market and things we look for. So what can we do with this previous daily PSP/TPD if it's not a blank week? If this wasn't a blank week, preferably I would like to see this be used as a continuation to serve for higher. Going to these highs right here. The MES daily candle up close for me color wise. Yeah, and that's why you have to focus on something a little bit deeper. So you don't have to worry about, because the color of the candles don't really mean a whole lot. What's your opinion regarding the 6-hour TPD? It could be of use, but let's not be cognitive biased towards this, because if we look at this 6-hour TPD, you can see, 6-hour TPD, price offered, and then boom, fell right back from the range. Is there any significance on whenever the continuous contract ticker and the monthly ones hit a target and the other one doesn't? For example, NQ 2025 hit all-time high way sooner than NQ1. I believe you have it switched or flipped around, meaning NQ1 hit all-time highs a lot sooner. And if you have back adjusted turned off, then yes, it's going to look like that. But the significance is that this is the raw data. So this is going to be where orders are actually, being bought and being sold. So this is the data that you want to trust. Could we have used a precision swing point in TPD 1 hour 6 a.m. as an entry for NASDAQ? Yes, but having things like that earlier on in the session is a little iffy, but it's doable. Yeah. Bullish weekly cycle plus bullish 90-minute cycle. NASDAQ makes higher low. I'm done with the 1-to-1. Nice. Like we said, we have a bearish cracking correlation and we have a bullish cracking correlation. So price could turn either way. Oh yeah, completely forgot about it already. I'm so used to there's a predetermined 90-minute sequential SMT with it. Do you have few set entry techniques slash models, or do you trade more discretionarily? Now, it's going to be a little bit more discretionary, but you can choose whether or not you want to be mechanical or not. The thing is, if you're mechanical, you're going to have trades run without you a lot more, so it's going to be dependent on your personality and the way you are. For example, I would rather sacrifice a little bit of risk reward and potentially a lower win rate for a guaranteed entry or a guaranteed trade. Even if all of the boxes aren't ticked, if I'm confident that one side is likely to deliver over another, I'm going to find a way to get in. You can mix both. 100%. Let's take today for example, right? We'll really know today would be a good example because looking at this chart, I don't want to really pick a side. I don't have, well, just due to the fact I still want to see the S&P go for its all-time highs. In a sense, I'm still bullish. But does that mean that I'm long right now? No. That means I still have to wait for a valid reasoning too long. Now, is that reasoning going to be something grand and important? It doesn't have to be. As long as it's there and it's something that's enough, then, well, that's it. Mixing the mechanical and the discretionary. Need to wait for time to be right? Exactly. Since Dow is in a weekly fair value gap, would you think that this would help the bearish narrative since we had a daily TPD? Or would you see that as a continuation? So, whenever you have gaps all the way out in time in the future like this, you're not looking at these as gaps price is going to completely reverse off of. Because it's too distant out in time. So this doesn't hold much significance. How'd you backtest discretional entries? Just keep track of confluence that led you to enter. Exactly. You just view, okay, we had this, this, and this, and it led me to think that price is going to go here. And then I use this as my entry technique. Too early to trade the 5-minute gap? No. You could trade this 5-minute gap if you want to be bullish. But like I said, we don't have... This is what makes it difficult. Do we have a clear-cut answer on whether or not price is likely to go for this high? No. If we did, would we choose this gap on a normal trading day? Probably. But that's why having narrative and understanding where the higher time frame is trying to get to is so important. Because you know what gaps will and won't work. What are your thoughts on back testing? What is the best way to do it and how long a day? Back test for like an hour to a day. But it's not something you want to stay there. Like, you don't want to just keep backtesting and backtesting and backtesting and backtesting forever and ever and ever. Trying to, chase something that's not there. And once you have a concept you're trying to really learn well, backtest 100 examples, and then after that, the effectiveness isn't going to be that much more beneficial after 100 examples, because then you have pretty much learned the concept. You can collect data on that. You can see day of week, week of month, time of day, all of that coming into factor. And then once you have all of that for those 100 examples, then yeah, like what somebody said, forward test. That's going to be where the magic comes from, because then you're going to be anticipating it, and you're going to be able to see it a lot better. Nine a.m. time frame, or 9 a.m. fair value gap. It's a TPD. Yeah, this would be, for those that have been around, this would be a precision gap. If you take any trades so far this week, no. Not after what happened today and how the day closed. after yesterday closed that pretty much told us that the week is not in our favor. Was it because there are different premium and discount ranges in the close? Yep. No, there's not. There is not a breaker here. Maybe on a 1 minute chart. No. Yeah. There's no breaker here. How can we make use of precision gaps? Treat it like a normal fair value gap. For universal model, how do you verify the breaker, wick, or body close? You're going to take both. Just love whenever my Discord gets shut down. Does the breaker need to be formed with SMT? It's a lot more higher probability whenever it is. This is not a breaker, no. Because we have lower low, lower high, lower low, lower high. Now could this be classified as a breaker? Yes. Or bearish delivery. Just took lower low, higher high, lower low again. Fair value gap in tune with it as well. So the night before, if you see the day close with correlated assets on different sides of premium and discount, and back-to-back conflicting sequential SMTs, that just means stay out. Exactly. Because then you're left playing guessing games. What's that one SpongeBob meme? Whenever he's like reading a book, and he's looking at two different pages at the same time. Somebody send it. Somebody knows what I'm talking about. No, not that one. Oh yeah, it is this one. It is this one, never mind. Yeah, it is this one. That's essentially what you have going on whenever you have multiple sequential SMTs on both sides of the market. What do you think about the yearly sequential SMT present as NQ took the all-time highs? I just see it more so as I want to see the S&P play catch up. Not so much the Dow. The Dow can, but I want to see the S&P come take out that high as well. Try to switch on the light bulb. Can you explain why you need a daily closure to confirm true reversal time true reversals? For example, monthly cycle, the cycle formed in tune with weekly halving theory. You can't frame a trade in that direction the same day it formed. You wait for the following day. Exactly. And the reasoning behind that is it takes time for larger moves to happen. What are we looking at? We have buy side, we have sell side, no clear directional bias. And we're just studying how that impacts how we view the market. And if certain things will hold, like this 5-minute gap. I would like to see if this gets used as support. But this 100% could fail. Because we don't have anything to frame that off of. So usually, I say, hey, this gap looks good. Don't take a trade off this gap. Do you ever use 30-minute TPD? No. What about 90-minute TPD? Not really. Our select time frame TPD is more probable. Like the time frame aligned ones, yes. Could you do a quick rundown on the current market? I'm currently conflicted right now. No clear narrative. Exactly. That is what I described earlier, that this is a difficult market to try to gauge and things are not clear. And you're right, there is no clear narrative. Can you explain why a particular index is weak or strong? So it's going to be dependent on the direction you are looking at. In terms of why it's strong or weak is going to come to a multitude of factors. But the cracks and correlations that form can have an influence on whether or not an asset is stronger or weaker compared to the others. So let's take, for example, let's look at the S&P, right? Not the S&P. Let's look at the NASDAQ. The NASDAQ is the strongest for downside right now and the weakest for upside. we can see that compared to the S&P, the Dow is taken out, or the Nasdaq is taken out this low right here being Tuesday's low, while the S&P has created a failure swing alongside the Dow. So the Nasdaq is weakest for upside, strongest for downside. But on the contrary, the Dow would be strongest for upside, weakest for downside. So the microcycle sequential SMT. Did you talk about the 6-hour TPD? No. So on a normal day, whenever we have something like this, I'd want to see it be used to kind of, this would be like a low-hanging objective, this high right here. From this 5-minute gap with the sequential SMT, see if price can trade into this gap, or not this gap, trade into this high. Yeah, today is just purely a study day. Don't put any risk behind today. Trust me. We still have the rest of the month. There's no reason to try to rush anything. In terms of strength and weakness for a lower time frame aspect, Nasdaq is going to be the leader. So I preferably want to see the Nasdaq try to reach this high first. But gears could shift at 9:30. We'll see. Because you already know a particular asset likes to do his own thing sometimes, or her thing. You know, we're not sexist around here. Some people call the Dow her. Dow's definitely a her. All right, we have the 9:30 opening bell. There we go. So the Nasdaq delivering strong. We have the S&P tagging into this 1-minute gap right here. So notice how the Dow and the Nasdaq are moving polar opposite to one another right now. Dow's reaching for that sell side. And now we're decoupled on the lower time frame and the higher time frame. So look at this. This is an amazing study. So this 5-minute gap right here that we outlined, notice of how the S&P is currently trading through this, breaking it, allowing it to fail, while we have the Nasdaq trading above it, still respecting it, and we have the Dow just completely dropping lower towards that higher time frame sell side liquidity pool. This is what a decoupled low probability market looks like. Trying to gauge a cracking correlation within here, even if it's a lower time frame one, you're going to be playing a lot of guessing games. And notice which one delivered first, or which one delivered strongest to where. If we look at this candle right here with the Dow and the Nasdaq, complete opposite. Like big down close candle on the Dow, big up close on the Nasdaq. Even though we get it right here, like it doesn't matter. Probabilities are not like this isn't going to be repeatable. I know there's somebody that took this, even though I said not to. Before you outlined it. Nice. Okay, so you guys mainly took it on paper, that's good. Took on live, easy, full port. So again, study. Notice how the S&P is just limp. Alright, still trading within that 5-minute gap. While the Nasdaq expanded way higher, taking out the high that was outlined. Going right towards that high. And the Dow trading lower, going towards a higher time frame sell side liquidity pool. Could we expect the S&P to play catch up? No. I love whenever Trading View leaks my IP. Is today distribution this week? No day is going to be distribution this week. Maybe not for a payroll day, but all three assets look completely different. Exactly. If you were a new trader and you had no idea how these markets function, you would think that each of these assets meant something different. For the Dow and sell side, could you show which low? This one right here. So these are the times where precision swing points, TPDs, precision candles, things of that nature, right? This is when they don't work. This is when they're not going to work in your favor. Because the markets are decoupled. There's no narrative to gauge a precision swing point or a TPD or a precision candle. Because whenever the assets are decoupled, it's going to look like it's there, but it's really not. And this is what I was referring to at the beginning of the week. This is whenever those things quote unquote fail. So the next runner-up on some highs for NASDAQ will be this and then this. Now, will we reach that? We don't know. Back to what we were saying about narrative earlier. Can you just simply expect this type of low probability price action that is hard to navigate? When coming into a day, you have those back-to-back conflicting sequential SMTs? Yes. I find it crazy that we can see these conditions beforehand. Exactly, we can. We have the tools to see this shit before it happens. We even knew on Monday that this type of price action was likely to happen. I was telling you guys on Monday, hey, watch out. Things are likely to not make sense this week. What did you see on Monday to predict this? It is a time distortion week. We have the NASDAQ hitting this high right here. So S&P being limp, NASDAQ being strong to upside, Dow being strong to downside. On the lower time frame aspect. On the lower time frame aspect, not the higher time frame. There's a difference between higher time frame and lower time frame strength and weakness. These are the kinds of days and these are the kinds of weeks that if you're new and you have no idea what we do, you're going to come in and you're going to wreck yourself trying to be a pattern trader. That's why it's so important that you have context behind doing what you do or looking for a specific direction. I feel like we might be decoupling to get the assets in sync on the higher time frame again. Maybe. But if anything, non-farm payroll is more likely to clear the air a little bit. Things can be hard to navigate, but for those massive news drivers, and then get cleared after, exactly. Yep. Will there be a taper again tomorrow? No. Thanks and have a good weekend. Yeah, some of you, like, we're probably going to wrap this up here in the next 15 minutes around 10 o'clock because there's not going to be much to do. Look for. This was a run that we saw, which I'm not even going to give too much credit and say that we saw this. But this is a run that we were able to foresee a little bit. But after that, look at the S&P, still within a consolidation. Since that morning open, or since the equities open at 9:30, consolidating on the S&P, while the Nasdaq and the Dow are moving polar opposite. And like I was saying, these assets are decoupled right now. So we wouldn't view this as a precision swing point for price to do anything. This candle right here. Wouldn't look at this as a TPD or a PSP to try to gauge the market. It's just the assets are decoupled. How do you gauge when to get off the charts on a day? I always try to stay on until 11 just to gain as much market experience as possible. On some days, the price action is so uninviting to even watch, such as today. So I used to be the same way as well. I used to watch the markets from 8:30, and we have the Nasdaq taking out this high right here. But I used to watch the market a little bit before 8:30, like 8:20, all the way until 11 o'clock. And if you're new, I would highly recommend it, like staying for that entire way. But something you'll notice is that period from 9:30 to 10 o'clock, that's usually where a majority of your opportunity will form. And then 10 o'clock will roll around and the volatility will slowly diminish throughout the session. So yes, 100%. If you want to gain experience, stay for that entire amount of time. The main reason why I got to where I am on how I'm so quick paced on decision making and really even gauging the 1 minute chart, because I started off on a 1 minute chart. Even though I tell you guys, hey, there's a specific time you want to use the 1 minute chart. How I got so good at reading price is because I never missed a morning session in my first year of trading. Every single day I showed up. Every single day. 5 days a week. For that 2 hour period. On a 1 minute chart. I would only study the 1 minute chart. Sometimes even a 30-second chart. That's going to expose you to how these candles fluctuate and how they print. Because price is fractal. You couldn't tell the difference between, if I were to show you a picture of a 4 hour chart, a weekly chart, a 5 second chart and a 15-minute chart, you wouldn't be able to decipher any of them. You wouldn't be able to point at one and say, yes, this is a 15-minute chart, or yes, this is a 4-hour chart, if you didn't know the context of the time frame behind it. So if you want to get good at understanding how these candles print and understanding the way price really fluctuates and moves, especially with the open, the high, the low, and the close, the best way to do that is by staying the entire morning session. Now, does that mean stay there and wait to do something? No, because there's a chance you're going to experience. What did I call it back then? Forgot off the top of my head. Decision fatigue. Yes. You'll experience decision fatigue. And if you're new, that's something that will bite you in the ass. If you come into a day predetermined that you will do something, give it enough time, you will. So let's say you hop on the charts at 8:20, and then 9:30 rolls around, you still haven't gotten in anything, right? And then from 9:30 to 10 o'clock, you're waiting. You've already been sitting on the charts for an hour and a half. If you're new and you're not used to the way these markets fluctuate, and you're not good at managing yourself, because especially if you're new, you're not going to be good at managing yourself in the beginning. You're not going to be as sharp, and you're not going to have that same mental clarity compared to as you were just coming into the session. So due to the fact you've been sitting there for so long, the human reward system, the way we function as humans, we don't want to sit here and just waste our time and just be here for no reason. So since we've been here for an hour and a half, hey, click the button. I know nothing's really there, but just click the button. That's what you're going to be telling yourself. And then come hell or high water, you'll click the button when something's really not there, but you think it's there just because you've been sitting here for so long and you don't want to make yourself think you wasted all this time. And then boom, there comes a loss. You're probably wondering, Jacob, how the hell do you know this? I literally did this last week because I've been in your position before. I know how it is. But I also know how to fix the things. I don't know how that question turned into a whole 10-minute tangent, but there you go. Tell us more about how to fix the thing. So how are you going to fix decision fatigue? This is what helped me. Is around 10 o'clock, and this is why I usually wrap up around 10 o'clock. Between 10 o'clock and 10:15, if I open the charts and I hop on the charts at about 8:20, which is when we usually do start the tape readings, we started them a little bit later this week, but usually 10 o'clock to 10:15, that's when my decision fatigue comes about. And the way I learn that is strictly through journaling. Journal your thoughts and especially how you feel, that emotional regulation throughout the trading day. Because like I said, another thing with the human response system is, although there is nothing that can, come out, like the boogeyman's not going to come out and jump us, come out and get us or anything. But if you're newer, and whenever there's money on the line and you don't know how to control your emotions, you're going to feel like a car that's in full throttle, but it's on neutral. So, man, for the people that have been here for a while, who remembers back whenever you were new and you would get done with the trading day, you didn't press any buttons at all, but you still felt exhausted, like mentally exhausted. Oh, exactly. So you want to figure out where that fine line is between, okay, from this duration of time, I can remain solvent. From this duration of time, through journaling, through collecting data on myself, not even in the charts, just collecting data on yourself. During this period of time, I can remain solvent. But once this specific time window hits, that's usually whenever I start doing stupid shit that causes me to do things I otherwise wouldn't do. So then next time that feeling creeps up and rolls around you, hey, click a button, do something. You've been here for all this time. You have to come out with at least something. You'd be like, no, I know what this is. This is just decision fatigue. So instead of clicking a button, I'm going to get out of my computer chair and walk away. Or instead of, hey, you've been here for all this time, just click a button. Just get something out of it. You've been sitting here. You don't want to waste your time. Say, okay, that's not how this game works. You don't get paid. We don't clock in and clock out here. But that's how you're going to fix that, is collecting data and journaling yourself, or on yourself, and understanding, okay, these time windows I tend to do this, or after this amount of time I tend to do this. Did you use to journal digitally before you moved on to writing paper? No. I have about, they're on my shelf right here, but I have 6 notebooks. One of them is 800 pages, and the rest average between 300 and 400. So I've journaled thousands of pages, handwritten. I think handwriting them is a lot more effective. It'll mean a lot more to you. Feels great because I no longer have that decision fatigue where I take dumb setups. Mostly now my issue is FOMO. Yeah, and FOMO is something you'll conquer over time. Because you'll come to the realization, oh shit, wait, I'm consistent. I'm consistently profitable. I can consistently predict the markets. This isn't going anywhere anytime soon. Once you come to that understanding, that's whenever you laugh at FOMO. But you need time of consistently being able to prove that you can be profitable. So that's just gonna come with time. Like this run right here, I didn't take this trade at all. Did I call it in front of you guys, or did I say, hey, Nasdaq is likely to deliver this high and respect this gap? I didn't take this trade. Do I feel like from this here all the way to all this bullish price run, am I like screeching on the inside? I should have taken this, whatever. No, I don't care. Because what have I shown you and demonstrated these past 6 months? Consistency. Exactly. I know next week it's just going to be the same thing. And then the week after that, the same thing. And then the week after that, the same thing. So FOMO, that's going to come with time. Do you ever look back at them? Sometimes. Just to see where my head was at back then. potentially a 4-hour TPD forming. And there goes that decision fatigue. I mean, it could work, but like I said, these aren't apt conditions. These aren't the conditions that you want to try to force something in. Drilling late, would you say we flip bullish on NASDAQ based on the 1 hour? If it was the weekly cycle sequential SMT? I said if either one could hold. Either sequential SMT. We didn't have a clear-cut narrative. We just looked at the nearest gap near the open, and then, that was it. After the weekly cycle SMT formed. So yeah, like I said, it could have very well failed. But anyways, tape reading was a little bit shorter than usual. I think we're going to go ahead and call it here. So in summary, we have the S&P. Look at how it overfilled this gap right here, trading through this gap and even closing through it and still bouncing back. But the S&P being generally consolidative, while the NASDAQ trading into the gap, not even touching the midpoint, taking out highs, exploding upon the open, while the Dow traded lower towards a higher time frame sell side liquidity pool, trading opposite to the NASDAQ. This is what low probability conditions look like, and what we saw today is what generally tends to happen whenever you don't have a clear-cut narrative. So again, should we trade tomorrow? If you want to trade before non-farm payroll, that is going to be a little tricky, but I would just recommend skipping out for the rest of the week because we still have the rest of the month. We move Friday stream to another day. We might do it Thursday for here. But yeah, hopefully you all found this one insightful. I will speak with you all again soon. With that being said, good luck and enjoy the rest of your day.